First of all, just wanted to get your strategy on acquisitions, because you are trying to become less dependent on pharmaceuticals. Would you be looking at any either big partnership or big acquisition going forward?
Yes, I think the second quarter results prove that our strategy of diversification into other high-growth areas of healthcare is really paying off. Now, as you know, we recently acquired Alcon. That was a significant acquisition for us, so it's left us with a considerable amount of debt. Our priority is to pay down debt, but I would tell you that if there are bolt-on acquisitions that can improve the scale of some of our other businesses, such as over-the-counter drugs or vaccines and diagnostics or animal health, we will take a hard look at them.
And how much would you pay for these bolt-on acquisitions? Do you still have a kind of treasure trove that you're keeping to its side, or how would you finance any acquisition that you may do in the future?
Because Novartis's cash flow is so significant, we generate about $1 billion of cash, free cash flow every month. So obviously you could see an acquisition in the range of $2 to $3 billion as what we consider a bolt-on acquisition.
So would you, for example, be interested in Pfizer's animal health business?
Well, I wouldn't want to speculate on any individual business, because obviously any acquisition strategy or what we're going to go after would be highly sensitive. But one way to look at this is if you look at our innovative pharmaceuticals and then also generics business, we have a vaccines business, an OTC business, and an animal health business, and I'm interested in increasing the scale of all of those businesses. So we would take a hard look at anything that was up, as long as we could maintain our discipline around prices and what we're willing to pay for an acquisition.
So you don't want to overpay. Is that the bottom line of any acquisition that you would do in the future?
That's exactly right. And part of the reason is that we have such great prospects internally in terms of our own investment. I mean, if you look at the second quarter, the fact that our businesses were up, I mean, our generics business was up 16% versus a year ago, and it's all organic. So we are able to invest in our business. We don't need to acquire. Some of our competition, some of our peers that don't have the same pipeline that we have would be forced into acquisitions to generate growth, but we're able to generate growth through internal development and new product launches.
I want to ask you also about the impact that the European debt crisis is having on your revenue. Are you having difficulty having some of your bills paid in periphery countries where austerity measures are very big, such as Greece? And I guess adversely, are countries like Germany going to continue cutting the reference price, therefore hurting your revenue?
We do expect that continued price cuts is going to be part of the way of doing business. And I think this quarter is a great example of how a diversified portfolio like Novartis can get through a period of price cuts, government price cuts, and still generate the kind of revenue growth that we were able to show. It's a testament to the breadth of our portfolio and the geographic spread of our portfolio. Regarding your question specifically about collecting receivables, we are working very hard and keeping a very close watch on those countries that have a significant amount of receivables due to Novartis. And we have worked down the numbers significantly for any country that is at risk. And so I feel relatively confident that we have that situation under control.
All right, Mr. Jimenez, thank you so much. That was Joseph Jimenez, the CEO of Novartis. Now